Hello and welcome to TIOmarkets Price Action Analysis. I'm Janne Muta, Chief Market Analyst for TIOmarkets, and today I have two lists for you. One for bearish markets and one for bullish markets, because obviously it will help you in your trading and planning your trading really when you have an understanding what might be the prevailing momentum in each of the markets. If you agree, just join me on this video and let's dive in. We don't provide any investment advice, and the views expressed here are our opinions only and do not constitute as advice or investment recommendation, and you should watch this video only if you agree with this disclaimer. Here's the first market, USD Yen in daily time frame, and as you can see, we are basically moving higher from another higher low. As you can see, we have a series of higher lows and series of higher highs. We've been pretty successful with this market lately, pointing out that when it was trading down here, that this market really had potential on the upside. Then we pointed out when it was kind of rolling over, and again yesterday we said it was trading at the 61.8 Fibonacci retracement, 20 period moving average, and it was possibly making a new low because it was close to the channel low. So this market is looking good. We have all the ingredients for uptrending market. Very clear example of a market that is trending higher. The key supports are basically the nearest one obviously is here at 104.92 and the next one down here at 104.40. The key resistance at the moment is the high of this candle at 106.22. The next market on our bullish list is US oil. As you can see, the market has been trending higher for quite some time. So there is a risk of kind of profit taking, distribution taking place in this market. But as long as it's making higher lows, things look good. So where are the key support areas at the moment? Looking at this, we have 20 period moving average, 20-day moving average here. Then we have 23.6 Fibonacci retracement. So from about 57.90 to 58.59 really. There we have a confluence zone there. Then if this level fails and if the market moves below this moving average, the rising trend line, then the next important level is down here. That's the next confluence level from 53.43 to the Fibonacci retracement, 50% Fibonacci retracement at 54.60 or so. So this is what this market looks like. While USD Yen was more of a swing trade kind of idea for me, I'm looking at this because it's been trading higher for quite some time and there's been this extension to the upside. So I'm thinking this may be a more of a day trading idea. But as usual, never trade anything based on assumptions. Always wait for market confirming the idea, and only then you know that the others are seeing the same thing, others are acting in a similar manner in this market, and then it helps obviously you in your trading. Another market on our bullish list is Kiwi dollar, New Zealand USD currency pair. Now, this morning there was news that the cash rate in New Zealand might start going up from December this year. So the market is moving higher on back of this news. And at the same time, we have a market here that is breaking out of this bullish triangle. And obviously, everybody has a different way of trading bullish markets, but here's one way. So if you are looking to have more upside potential for your trades, then obviously it makes sense in a bullish market to wait for a pullback. And I explain what I mean here. So at the moment we are about 60 pips away from the channel high, so we don't really know how much upside we have at the moment, if it's going to be more than 60 pips. But if the market first retraces to one of these support levels and then bounces higher, then we are talking about 150 pip potential roughly there. The key support levels in this market are here, the previous resistance levels, so 73.15, and here the other one, roughly 72.47 to 72.54 or so. That's where we have the key support levels if we get retracements in this market. Okay, then we move to stocks. We have Nikkei index here in the daily time frame. This market has been moving to historic highs lately on the back of the QE from the Japanese government and central bank. Now, the market moved above the bull channel here and it had to retrace for a little while, and now after 6 days or so we are touching the previous resistance here at the level is 29,560, and it coincides with 23.6 Fibonacci retracement. And then you have also the 20-day SMA here at 29,362. So that's the confluence zone at the moment that many market participants, are focusing on. If this fails, then the next one is down here around the 50% retracement, and we also have 50 period moving average here, the 50-day SMA, and the channel low. So I believe this is going to be a highly important level should the market fail to attract buyers at this level. But let's go and see what the S&P and Nasdaq have been doing, because there was a rally yesterday, and obviously these markets will have an impact on other stock markets like Nikkei also. And here we have S&P 500, the biggest and most followed, the most weightiest index in the world in terms of the importance that people put on this index. Now, yesterday, the markets really started buying before Powell's speech. Right at the open of the New York session yesterday, the buying came in and this rally was quite strong. The market had retraced back to 50-day SMA and also to the level where the channel, not the channel low, but the rising trend line was fairly close, and the 23.6 Fibonacci retracement. So this really shows that markets believe in the Fed. They believe in the QE continuing, and they are in buy the dips mode. So basically this is what we are seeing. We have seen this taking place over and over again. Buy the dips, as each time the market comes lower, it's at some stage buying comes in, and so we are in a bull phase with this market as well. The key support levels in these markets are here, obviously this range here where we have technical factors coming together from 3775 to 3812.50, and then should that level fail to hold, then the next level is down here around 38.2 Fibonacci retracement, and this low here from let me see, that was really early this month, February. So this range from 3660 to 3690 is another highly important key level, but then we would be trading below the rising trend line, and that would be a negative. At the moment, markets look strong. They are willing and ready to buy the market, and they do buy the stocks higher as they come to supports. Okay, Nasdaq 100 in daily time frame. This kind of raises a little bit more questions than S&P. It has been, this recent retracement has been quite deep, and so we have hit this 38.2 level again, but like with S&P, we saw lots of buying coming in here. So this is the key level now, around 12,766. If this level doesn't hold, then we obviously have okay, let's see how this looks like. let's take the sort of bearish scenario here first, although I do believe these markets are bullish at the moment. So if this level doesn't hold, then we should be looking at further downside, maybe all the way down to this sort of 11,667 or so region here. But then we are not there yet. The markets attracted buyers yesterday above this level. So at the moment, as long as we get follow through now here and the market just doesn't roll over and start hitting this level again and again, as long as that doesn't happen, things look good and this market is promising more upside. Okay, then our short bearish list. Here we go. We were looking at gold, and this is daily time frame. We were looking at gold last Friday, and you can verify this by going to TIOmarkets.com/analysis. When the market was trading down here, we said that it seems to us that traders are willing to defend the 1764 support, and if we go above 1777, it's likely that we head to this resistance. Now, the market has rallied to this resistance area, and also you can see our previous analysis that we pointed out this area before as a potential resistance, mainly because we have this support here, 1818 support, and the historical resistance. It was support, but now it's resistance. So this level here and the 20-day moving average coinciding at the same level. Now, yesterday's trading was, the red team was taking over, greens were not in charge anymore, and now it seems like we are putting in a lower daily high. So that suggests that the market is likely to roll over. Obviously, if we now get a rally and push above this 1818, then it's likely that we go and test the upper end of the channel here. But kind of this weakness in gold ties together with the fact that there is bullishness in stocks. Obviously, you don't need the gold as a hedge, you don't need the safe haven if the stocks are going higher. And then the last market in our bearish list, here we have Aussie New Zealand. As you can see, the market rallied and has tried twice to stay above 61.8 Fibonacci retracement, and both times it has failed. The latter time we had a lower high created. So if we look at this sort of as a medium term idea, then this bearishness could bring the market closer to this rising trend line here. At the moment though, this market is trading at this red level here. I've marked it here because you can see how often this same level has had historical significance. So the fact that we are trading at such a level and close to both 20 and 50-day moving averages could give us a bounce higher. So if now that we get a rally that then fails and rolls over, then that would be a confirmation to the bearish idea, and the market would be quite likely to trade somewhere down here where we have the rising trend line. If that doesn't happen and the market just keeps on going higher, that would obviously mean that Aussie turns and it becomes stronger than New Zealand dollar. So that obviously would kind of negate the idea that we had on looking at this. But at the moment, we have bearish signs here. The market has broken below this candle here. It retraced back to this level that failed as well. So if the market just rallies a bit and then rolls over, that's the confirmation to this bearish idea. All right, thank you for your time. As usual, I hope that you trade safe, and if you want to learn more about trading strategies and trading itself on all the different aspects, come to my webinar next week and we can see what I can do to help you to grow as a trader. So, lovely to have you here, and I look forward to seeing you on the next video.